The 7 hidden risks of the wheel strategy. The wheel strategy is one of the most hyped up trading strategies out there. People call it easy money, sell puts, collect premium, and worst case scenario, you buy a stock that you like at a discount. Well, here's what they don't tell you. The wheel can be a trap, and if you don't understand the risks, you could lose far more than you expect. Before you jump in, let me show you the 7 major risks that nobody talks about. Number 1, blurring long-term versus short-term trading. The first issue with the wheel strategy is that it messes with your trading plan. You start out selling puts for quick income, but if the stock drops, suddenly you're a long-term investor, whether you like it or not. If you didn't plan on holding a stock for months or years, why are you doing it now? The wheel forces you to hold on to losing positions just to avoid realizing a loss. That's not a solid strategy. It's just hoping for a comeback. Number 2, asymmetric risk. Small wins and big losses. The wheel strategy has a high win rate. 70, 80, even 90% of trades make money. Sounds great, right? But here's the part people ignore. The profits are small and the losses can be huge. One bad trade could wipe out months or even years of gains. Selling puts makes you money most of the time, but when you lose, you can lose big. Are you prepared for that? Number 3, poor sizing, going too big, too fast. This is where most traders go wrong. They start small, but then overcommit. If you have a $10,000 account and you sell a put that could assign you at $8,500 worth of stock, you're already at risk. And if that stock tanks, you've lost control of your portfolio. Oversizing leads to margin calls, forced liquidations, and emotional trading. If you're not careful, you can blow out your account before you even realize what's happening. Number 4, the trap trader problem. The wheel traps traders in losing positions. If your stock drops, what do? You either sell for a loss and move on, or sell more puts to lower your cost basis, but now you're just digging a deeper hole. I've seen traders hold on to losing positions for over a year just to break even. If you're doing that, you're no longer trading, you're stuck. Number 5, gap risk, the overnight disaster. This is one of the scariest risks, gap risk. You sell a put at $65 thinking it's safe, then overnight, bad earnings or unexpected news hits, and the stock opens at $40. Now what? You're forced to buy at that terrible price, unlike a limit order where you can just adjust your entry. That's a huge risk no one talks about. And number 6, stock selection and the myth of picking the right stock. I hear this all the time. Just do the wheel on stocks that always go up. That worked great in 2020 and 2021 when everything went up. Then 2022 happened and those same stocks crashed 50 to 70%. If picking the right stocks was so easy, wouldn't everyone be rich? The reality is a stock's direction is unpredictable. And number 7, just keep selling puts to lower your cost basis. This is the most dangerous mindset. Just keep selling puts to lower your cost basis? Sounds smart, right? But what if the stock keeps falling? Now you're just throwing more money into a sinking ship. This isn't dollar cost averaging. It's blindly hoping that the market bails you out. And hope is not a strategy. So does this mean the wheel strategy is bad? Not necessarily. But if you don't fully understand the risks, it could be the most dangerous trade you ever make. If you're considering the wheel, understand the risks before you trade. Keep your size small. Don't overcommit. Prepare for that gap and market drops. And don't get trapped in losing positions. Trading isn't about luck. It's about risk management and smart decision making. If you're looking for a better, safer option strategy, check out the Safe Wheel, a system I give away completely free. Just subscribe and hit the notification bell to catch my weekly live streams where I trade the Safe Wheel live and break down every move and answer all your questions so you can master it at no cost.